when Italy announced it was trying to get its house in order fiscally, that would make some labor reforms and some economic reforms. But even that didn't really hold the greater part of the rally, where we were up more than 150 points. But we've got an all-star panel to make sense of all of this. Stifel Nicolaus Portfolio Manager Chad Morganlander, Land Coal Trading's Todd Schoenberger, First Trust Advisors Chief Economist Brian Wesbury, and Challenger Gray and Christmas's CEO John Challenger. Chad, to you first. When you see the behavior that you saw yesterday, then sort of overlapped over what we saw today, what does that tell you about how we might move next week?
Well, keep in mind, we have a financially stressed system. And what I believe what's going to happen next week is we do not come in with a big plan by the ECB or the Monetary Authority or the politicians over in Europe, then we're going to see a continuation of gyrations within the financial markets. The Europeans need to get their house in order. They need to de-lever themselves. They need also to come in with a plan on how they're going to straighten out their financial structure with the monetary union.
You know what, Brian, though, back in 2008, and there's been so much talk about how this session compares to 2008, the fall of 2008, yesterday anyway. The thing is, 2008 was about a financial crisis. 2011 seems to be more about a confidence in government crisis or lack thereof. Talk about the differences.
Yeah, well, first of all, let me just say right off the top that this is not 2008 in terms of size or I think it's danger. One of the big problems with 2008 was mark-to-market accounting. That's literally, it's like throwing gasoline on a fire. So once we started to go down, we started marking things down and illiquidity showed up. We don't have that. We have tremendous liquidity today. And also banks are very well capitalized. They've known this is coming for a long, long time. So it is kind of interesting that it shifted from the private sector now to the government sector. I would argue that the government had a lot to do with over-leverage and mortgages because they pushed so many subprime and low-income loans. But now it's shifted to the government. And if we can fix our fiscal houses around the world, boy, that could lead to a huge rally in the years ahead, because that's one of the last real problems remaining in the world.
Okay, so let's get to the piece of data that actually helped turn the market to the upside this morning, and that was the Labor Department numbers that came out for the month of July. We saw a build of 117,000 jobs. The unemployment rate ticked down just 0.1%. But would you have expected, John, that with the indication from that number where we saw more private sector jobs coming as far as growth were concerned, that we would have seen a better rally off that?
Well, certainly in the beginning, I think there was optimism about this. It wasn't a fabulous number. We didn't go above 200,000. That would have really sent the market, back to the story that we've been telling ourselves for some time, that we're in a recovery mode. It's not always going to be positive. We slip back at times, but all in all, the momentum is forward. All of a sudden, we began to get worried that maybe we were actually in a recession mode. GDP, those revisions last week just scared everybody. It was almost like a delayed reaction hidden by all the debt ceiling issues, and now all of a sudden the market started to react. So I think that number, it wasn't an extraordinary number, but it certainly calmed a lot of fears that we weren't in imminent danger of falling into recession.
But you know what, Todd Schoenberger, I have to ask you this. I mean, he's talking about, we saw growth in the private sector. We did see private sector jobs grow. But the private sector, companies are sitting on $2 trillion in cash right now. Why are they not hiring more than what they are now? It doesn't make sense to me.
They don't need to, Cheryl. Listen, publicly traded companies have a fiduciary responsibility to their shareholders. They don't have a fiduciary responsibility to the United States of America. And as painful as that is to say, they don't need to hire right now. They need to make sure that they can help that bottom line and help increase shareholder value. And listen, this number today, we beat expectations because the assumptions were already so low. This is the equivalent of getting a D on an exam when you already expect it to fail. There's nothing good about this number. We should be north, and I'll tell you what, John, we should be well north of 200. We should be up to 300,000 right now.
John, you want to reply to
I'm
that?
not really buying that. I think that That's going too
go
far.
ahead.
I mean, this economy, we created almost 750,000 jobs, February, March, and April. We slipped back like we've been seeing now for some time in this kind of
John,
period of
I hear
climbing
layoff
out
announcements.
of this recovery.
Cisco, 10,000
so I think
jobs.
everybody
Research
gets
in
too
motion.
optimistic.
Everybody's
sometimes.
being laid off. I want to know who actually got hired. I want to actually see the 117,000.
I'll tell you, and Chad, you can weigh in on that. I've had a parade of CEOs, everyone from ValueClick to Intel, where they say they are actually hiring, and not just overseas, in this country, Chad.
Look, we need to incentivize business on the long term. These policies that we're putting in place are short-term, 18-month, 24-month tax benefits, and it's not going to work. We need to have a 10-year plan. We have to put in a very, very astute plan so that policymakers, business decision makers, know for the long run that their decisions that they make are in place for 10 years.
There's too much uncertainty out there.
Hold on a second. Brian Wesbury, let me let you in here.
Yeah, how about we don't plan anything and we just get out of the way?
Excellent.
Government is too big.
You get out of the way, let business do what business does best.
Yeah, that's exactly right. We don't need a plan. But, you know, look, this number, I'm not going to try and say we had a gangbusters employment number, but we've had 18 straight months of private sector job growth, and they are growing. I don't care whether somebody knows people that are hiring or not. These numbers are real. We're adding jobs. It's not gangbusters, but this economy is growing.
We're adding jobs, but keep in mind that there was a huge fiscal thrust of $785 billion back in March of 2009. That's a heck of a lot of money to put to work in the economy, courtesy of the U.S. government. And now that fiscal thrust is going through, and you're going to have a fiscal drag. And that is the problem. That's the reason why the markets reacted the way they did.
This is all blamed on the federal government right now. If you look at all the talk that was going on, this did nothing for confidence right now. And now Wall Street is sending a message to Washington that, yes, you can't even get your act in order. How are we going to do ours right now? We're not going to hire.
Thanks to Chad Morganland, our Land Coal Tradings, along with Todd Schoenberger and Chief Economist of First Trust Advisors, Brian Wesbury. I'm saying all these names. And John Challenger, Challenger Gray, and Chris